Welcome to Taxed and Confused, the podcast where tax administration meets real talk. We are your hosts, Lizzie and Lisa, two tax nerds on a mission to decode the rules, demystify the tax system, and maybe even make you laugh along the way. From tax returns to objections and everything in between, we're diving into the world where the burden of proof is on you, not the ATO. That's right, this isn't criminal law. In tax, you're guilty until proven compliant. But just a quick heads up, this podcast is for education purposes only. It's not tax advice, and it's definitely not a substitute for professional guidance tailored to your situation. So brace for bureaucracy and join us as we explore the weird, the wonky, and the wildly important world of tax admin. Because when it comes to tax, we're all a little taxed and confused. So welcome, Lisa. Today we are talking about the income tax return. This might seem a little bit basic to many, but there is lots riding on this form. So are you ready to roll?
Absolutely, Lizzie, yes. It's one of those things when you talk to someone at the local coffee shop or, at the wherever you are in the community, people go, do I have to lodge a tax return? Oh, I hate doing it. It's all the admin that people hate, isn't it? So it's important to know when you can and can't. And, as we're getting an older population as well, they're going, do I still have to lodge one or not? What's going on? And it's also interesting as well because people go, oh, I don't think I have to lodge one. I said, but have you told the ATO? They're not mind readers.
Totally. Oh, wouldn't that be great? Although I think a lot of people would be worried if they were mind readers, to be honest.
Well, I think they know a hell of a lot about us, Lizzie. So I think they sort of are.
Yeah, they
to
are
some extent. It's a bit friggin' scary, I think, with some people, thinking that, they couldn't, sort of go, does the ATO know this about them? But anyway.
Yeah,
interesting.
Good. So let's start off with, what is an income tax return?
An income tax return, well, we've got this self-assessment system, haven't we? So it's like I think people don't quite understand that. The ATO don't tell you how much tax to pay. We tell them what tax we pay, and they just sort of check it, isn't it? So it's what we need to do on a yearly basis.
So it's
We've
literally
got to
a
tell the ATO.
form.
It's a communication vehicle to the ATO, which is collecting all our consolidated revenue to build roads and schools and hospitals and things like that. We know it's a good thing to pay tax, even though we don't like doing it. So it's basically a form to say this is the tax we've got to pay for the year, and it's any taxpayer and any entity. So the other thing to explore is we've got two different types of taxpayers. We've got us individuals and we've got companies, because they're the ones with tax rates. But we've also got other entities like trusts and partnerships. And remember, super funds sort of fit into the trust one, so we won't go there. You still got to lodge a tax return for those to tell the ATO where to go look for the money, really. And that's all the obligations that we need to do. But that's what it is. It's sort of can we say it's a 30 June reconciliation?
Yeah,
that's how I think about it.
Think about it. Yeah, you're looking at all your incomes coming in, your outgoings going out, that all kind of meet certain criteria, so are compliant with the definition of assessable income and allowable deductions. Popping that key information in, submitting it, and that's telling the commissioner what tax you're obliged to pay, and including any prepayments of tax through the PAYG system or franking credits if you've got dividend income. If you have any of those, that should offset your liability, and whatever's left you're either paying, or whatever you've overpaid you can then get back.
Yeah, that's exactly right. And for individuals, I always find that, especially my younger cohort of clients, they always go, Lisa, I want some money, I want to buy a car, I need to do my tax return. And I go, it doesn't actually mean you're automatically getting a refund. And again, when you're talking to people anecdotally, they go, oh, I'm glad I'm getting a refund. And I said, well, that's actually bad, because it means the ATO's had the use of your money for 12 months. When you think about it that way, I think paying tax is a good thing because you've had the money to use, right? So it's really interesting. And we know what happens when we lodge the tax return. It's really a true up. Ideally, when you lodge a tax return, you should have no payable, no receivable, really. No refund, no payable if the system is working millimetre perfect. That's how it's designed. So if you get a refund, it means they've got your money. And if
Yeah,
you've got a
that's it.
payable, it means you've had the use of it at least. So it's interesting that the psychology of it all is actually reversed to what it actually is when you look at it,
Yeah.
because I really love making sure that everyone understands finances and our tax system, because I don't think many people actually do.
Mm.
Even my business clients don't really understand how it all works,
Yeah.
fundamentally.
Yeah, and ultimately, like if you imagine if the taxpayer is a wage earner, they might have a little bit of interest, they might have a little bit of dividend income, but overall, the PAYG that they're paying through their wages will largely cover the tax obligation, and they should be about right if they've
Meant
got a
to.
little bit of
Yeah.
deductions. You're more likely to then be payable if you've then got more robust or diversified activities. So if you've got a bigger holding of shares, so you're getting a greater level of dividend income, or you've got interest income coming in, or other sources of income that may not have those prepayments of tax attached to those. So you're going to start having more complex affairs, or a rental property. So, depending on the level of complexity of the tax affairs, you're going to then lead to a little bit of variation. But for the everyday taxpayer who's mainly just a wage earner, you shouldn't really be expecting too much back from it. And that's probably
Ideally,
a
it
good
is. It's
thing.
meant to
Yeah.
be. It's ideal. That's how it's designed. It
Mm,
really
mm,
is. And when
yeah.
I talk to clients, I go, well, is there's two buckets of income. There's the income that's had some tax paid throughout the year, and then there's this bucket of income that hasn't.
Mm,
And this
mm,
other bucket of income is the pay-as-you-go installment system, which is, I'm not a big fan of it. I'm sorry, I'm a big fan of what it's trying to achieve, but not the way that it's executed, because it gets very confusing, because your salary and wage is sort of, unless you get a huge bonus or something, it's quite stable.
mm,
But your
mm,
other bucket that doesn't have any tax paid, you could sell, your big share portfolio, or you could
mm,
sell your investment property, or something like that, and all of a sudden you got this big tax bill that you didn't allow
mm,
for.
mm,
Okay, so
mm.
it's very hard to get it absolutely correct.
Yeah, totally. And that's where, tax practitioners come in to be able to assist and talk through these things. So if you are going in to have those big CGT events that might increase your tax liability, it might be a good idea to get in early with a tax practitioner to talk that through and the consequences before the year ends. So you can look at, what to expect for that tax bill, so it's not such a shock. Um,
Yeah, but it's exactly what you said. It's quite interesting, because we do tax historically. Okay, if you look
mm,
at the difference between, it's like financial accounting. You do the financials now for 30 June, previous year. Management accounting, we're looking at forward thinking. It's more forecasting and going forward. So what happens is, most of the time for, small little individual taxpayers, they come to us when it's too late to do much planning as
mm,
well,
mm,
right? They've gone, oh, maybe, ideal one is an investment property that's been sold in June, but settlement's not till September. All of a sudden they go, oh, do I have to pay the tax in the previous financial year? I
mm,
thought I had to pay the next one. All the timing of that CGT event
mm,
A1, as we know. So
mm,
it's one of those things where sometimes when we see our individual clients, it's actually too late, because we're doing it
mm,
historically. So it's
mm,
really good, I think, for everyone to take a bit of a tax check on, say 1
mm,
June, when you can do something for that year, and
mm,
just go,
mm,
okay, what can I do to make sure I know how much tax I will have to pay roughly? Or is there anything that I can do to reduce it in June? Because
mm,
with
mm.
all the electronic stuff that we do now, all the data matching, you can't time travel anymore. Everything is
Mm.
time stamped.
Yeah, yeah, for sure. And so when you're preparing that tax return, that technology is assisting by providing essentially nudges or confirmations that perhaps the taxpayer has engaged in a CGT event, or has held crypto, or things like that, which can be
Absolutely.
useful and a good conversation starter. But it's then about unpacking, what that actually means and determining the outcome. And sometimes that can open up, for the tax practitioner, open up a can of worms if that hasn't had a conversation beforehand, because all of a sudden your workloads and your flow of jobs on the go can all of a sudden, be thrown up in the air if you've suddenly got to reconcile and deal with really complex transactions and interpreting what's going on and reconciling and determining the income tax implications. And it can be then lead to a bit of a shock of, okay, this is going to add to the cost of even the client paying for that service from the tax practitioner as well.
Well, it's even have they got all the records? If look at something like an investment property, maybe it was their main residence originally, something like that. Or they might not understand. They go, or if they sell their main residence but realize it was originally their investment property. All those sort of calculations. There's a lot of taxpayers out there that don't quite understand how it all works, that they go, oh, I thought that was all free. Lisa, what do you mean? I'm main residence exemption. I said, no. And then you've got to go, well, have you got all the paperwork to try and reduce this somehow? So it's interesting to reestablish and reconnect what needs to be done. Again, we're doing everything historically.
Yeah, for sure. And being mindful that those clients or the taxpayers might be having some interesting pub talk or having a conversation with Gen AI that might give them an impression of a certain refund or deductions that they might be able to claim. But once you actually look down into the weeds in the details, things might not be deductible, or there might be further accessible amounts that haven't been contemplated. So having awareness of that obligation, because ultimately, going back to the income tax return, you're then compiling this information. You're going to be declaring that it's true and correct. You're signing off on it as a taxpayer, and that's essentially for the commissioner to then assess you and your circumstances on what tax obligation there is. So it's really important that you are getting it right the first time. And so if you've got more complex tax affairs, having that conversation with the tax practitioner is a really important aspect or relevant consideration for taxpayers to have.
Yeah, well, that sort of opens up the data matching aspect to it as well, Lizzie. I think that you're sort of alluding to. So every time we do anything with our tax file number, our unique one, please do not tell anyone, because if you have a compromised TFN, it is diabolical to manage that, because the ATO will not issue you a new one, which is really important to know as well. So if you have your other IDs like driver's license compromised, they'll issue you a whole new number. Tax file number, no, you don't get it. So whenever you drop your tax file number into anything to open up any sort of an account or do any sort of transaction, that data then through Amazon Web Services, if it's all working, basically gives it to the ATO. So the ATO, and there's two buckets of information the ATO's got, isn't it? So they've got all the income stuff. When we look in either the individual taxpayer's client, MyGov, that's fine. Or we can see it as tax agents through our portal. All the income is sort of there, or there's warning nudges for that as well. But also the ATO's got a lot of other data. They've got Vic Roads data, or we're in Victoria, so I shouldn't say that. The state authority, I shouldn't be parochial Victorian, but I am. Got all that data, financial institutions data, things like investment mortgages and things like that. All that data is available, but the client, the taxpayer, doesn't actually see it as well. So there's a lot of data that comes in. So if we lodge a tax return, we as a tax agent, or the client, the taxpayer, lodges a tax return saying it's true and correct, the ATO is going to data match with all the available data. Some can be seen and some is invisible, but they know about. Right. So and it's interesting as well. So something like interest, there's a certainty indicator that is high. So you open up a bank account, you get bank interest, you've got your tax file number on there, it comes all in. So there's a certainty indicator. You can't vary that. They'll vary it back. Right. And it's all those sort of things. Or there'll be a please explain going, well, this doesn't match our records. And again, in terms of timing of our tax returns, is all the data in there to begin with? There's so many clients that come to me on the 28th of June and go, Lise, can you do my tax return now? I'm getting a refund. And I'm going, can we please wait? Can we please wait? The ATO won't even accept them until, I think it's the 14th of July from memory, but it's basically they give you 2 weeks for all the data to come in. So all the Your private health insurance is usually in by then. The interest from the major banks is usually in by then. But if you've got a managed investment trust or some fancy stable security, you might be waiting till October for it to all come in. So you've got to wait to make sure the data matching is there, because is your records the same as the ATO's records? And if there is any difference, who's right, who's wrong?
And so there's that sweet spot of we want to have timely compliance, and the ATO will certainly welcome timely compliance, but we don't want you to be too soon either. So once 30th of June hits, there's that kind of cautionary tale of that first essentially month where you've got to be really mindful about if you are lodging straight away. Should you be lodging straight away, and what's the risk of you having to then do an amended assessment, or the ATO correcting something based on their data that they have. So there's that sweet spot and balancing act around the time that you can lodge as to whether you should lodge, which is really important. So you'll often see the ATO media out and about around that time, really cautioning that and being mindful of particularly with MyTax, with the lodgement, the self-lodgement system, for those taxpayers just getting in a little bit quick, to be really mindful. If a tax practitioner is being engaged, obviously the tax practitioner will be educating and advising appropriately and have their own work flows being managed. But particularly the MyTax lodgers who are doing it themselves and not maybe aware of that lack of information and completeness, it's a real concern for the ATO each year.
So that sort of comes to the lodgement program, doesn't it, Lizzie, which we've sort of touched on.
Yeah.
So for individual taxpayers, if they lodge themselves, they've got till the 31st of October to lodge, in case any longer like those time. But if you're using a tax agent, we're on a special deferred program, providing, I love this though, providing we meet at least 85% of our lodgements on time. So if our client lodges late, it impacts us because it can affect our lodgement program. Now, I've never seen any tax agent lose their lodgement program as long as you endeavour to do it, but you've got to stay above 85% lodgements. And so if you're dealing like I do with smaller businesses and things like that, the deferred lodgement is up to the 15th of May, even for individuals. So it's quite interesting. Some clients will go, if I get a return, can you lodge early? If I've got a payable, hey, I'll use you, and then I don't have to lodge until the 15th of May, making that tax payable sometime in June is the way that it works. So it's quite interesting because, when you lodge a tax return and the self-assessment system, then what happens is you haven't actually officially lodged until, if you're an individual, until the ATO accepts it or the commissioner accepts it and issues you a notice of assessment. Right, and that's for individuals. If it's a trust or a company, the notice of assessment is on lodgement.
Yeah, wow, yeah. And so then if you are in a payable position, how long do you have to pay as soon as you've lodged that then, depending on if you're an individual or a company, just to...
It depends on, for an individual, it depends on actually when you lodge. There's different timeframes for it. So if you lodge in up until, from 1 July to like 31st of December, it's usually not, the payable's not till like the 21st of March. But then you've got the other window. So there's different windows that happen with the payable. But of course, if it's in a refund, lodges, the ATO processes it within, let's say 2 weeks sort of thing. They've got their service metrics, but let's just go with sort of the 2-week time frame, and then the refund will come into the bank account, providing you've given the right bank account details. So you can delay, if you're an individual, it can delay your payable till the middle of June.
Wow. So moving on, can there be instances where you are not required to lodge a tax return?
Well, this is always the interesting one. It's sort of like, as we said earlier, the ATO is not a mind reader. They need to know. So as soon as you get a tax file number, and it happens a lot with 16-year-olds that, go to get their first job, they get their tax file number and then they don't work for a while. Oh, they said, we might have got the job, but then we decided not to. As soon as you get a tax file number, the ATO need to know whether you have to lodge or not. Okay, you've got to tell them. You might not have to, but you still have to tell them because they don't know what income you've received. Because remember, cash is still legal currency. And if you get cashies, you still need to declare it as assessable income. And so for individuals, we've got this tax-free threshold. Okay, so if you're under the tax-free threshold and you don't have any pay-as-you-go withholding, so if you're a salary and wage earner under the tax-free threshold, but you've had pay-as-you-go withholding getting taken out, you still need to lodge the return to get your money back, your tax back. Okay, but if you've got an investment property and you've got no other income, you still have to lodge a tax return, even if you're under the tax-free threshold. Also, a lot of my clients, get some sort of Services Australia income. Remember that it's a true up, as we said earlier. The tax return is a true up or a reconciliation for the year. So if you're claiming any sort of benefits from Services Australia, Centrelink, etc., the ATO go, well, are you eligible for it or not? And it's interesting. I lodge a tax return and I use this terminology. It's my terminology. Is it clean or not? I use the clean terminology. So it's sort of like if I lodge the tax return, I can see whether the refund of the payable is in the account, in the income tax account. Okay. And I go, great, it's clean. But sometimes when I lodge a tax return, I get this little message saying, just talking to other government departments. There's a little nice little message for that, which means that my client has got some connection with Services Australia or something else. Because what happens if there's a refund due to the client from a tax perspective, but they've also got some sort of benefit from Services Australia that they haven't declared their right taxable income. Can I use a very colloquial term? They'll snaffle, the ATO will snaffle your return, right? And that's how I term it. So it's very much an all of government approach.
Yeah.
So I've got to be very careful when I say to clients, you're likely to get a refund. I've got to be very careful with my language because if they have got debt anywhere else in the government system, there goes your refund.
Yeah, yeah. So essentially, no matter what, if you've got a TFN, you're going to be lodging something, whether it's the tax return, whether it's a lodgement not necessary, you're still going to be notifying. So there is still some kind of lodgement process that is going to occur. And there's also a refund of franking credits form you can submit as well if that's if your circumstances meet those.
So let's look at the other end of the spectrum when someone's just getting pension income or something like that when they're older. We can say, yep, final return, it's all good there. And even if they've got some investments in, Telstra or AMP or those sort of ones where a lot of mum and dad investors have been given them through insurance policies or everyone bought into Telstra in one of the tranches. If we're young enough or old enough to remember it, you can do just a franking credit to get your franking credits back. Okay, but you can say, I now no longer need to lodge a tax return anymore, and then you've met your obligations. But the other thing I find interesting with the younger people as well is that if they've got any outstanding returns, I've had a few of my clients who are lawyers, and when you get admitted to to practice this law, you can't have any outstanding tax returns. And what happens is they've got some feral tax return that they haven't lodged when they were 16 or 17, and they have to quickly do all the back lodges of tax returns as well, which is quite interesting. But it's the things that people don't realise. And of course, if you don't lodge, it can impact your due date for lodgement in future years as well. Okay, as I said, if you're a self-lodger, you've got till the 31st of October. But if you haven't lodged your previous return and you use a tax agent, it's still 31 October, right? You don't get our deferral till the 15th of May because you've got outstanding obligations.
And it is really important to stay compliant with the ATO. That good standing essentially is embedded there. So, no matter what, it's always good to lodge on time, making sure that you've done your due diligence. You're going to end up in a worse position if you keep on pushing it down the line, not doing what you need to, because then that makes it more difficult in a sense to, catch up to then get support from the ATO because of the fact that you've not done those key steps in the process of lodging each year.
Yeah, it's look, is it tax hygiene or something? We could call it that, Lizzie, maybe that, you know, people ask me, am I getting into trouble, down at a coffee shop or something, am I getting into trouble if I haven't lodged? And I said, well, yeah, sort of, like it's going to cost you, or it might cost you. But if something goes wrong, the ATO will definitely look at your respect of the tax laws. And if you've got reason to, lodge on time and those sort of things. I know as a tax agent, I've got to keep all my affairs in squeaky clean order, which means I've got to lodge any connected entity with me on time, right? Anything that I've got control of and all my own. I've got to make sure all my tax payments are made. Okay. Otherwise, that compromises my tax agent number. So I'm one of the few accountants that will do all their tax affairs first thing. That's them. I'm my most important client. Okay. Some go, some have the approach of, the cobbler's kids have got no shoes. And I go, no, please make sure that you lodge everything on time, because if you need can I put it this way? If you need a favour, even though we're talking about tax admin and there's laws associated with it, but if you need, instead of a favour, it might be better to use, if you need the discretion of the commissioner, they will take your good tax compliance history into account, most definitely. Okay.
Yeah. And just like really kind of honing in on, particularly for tax practitioners, you're required to be registered with the Tax Practitioners Board and required to be compliant with the Code of Conduct. So one of the key items within that Code of Conduct is actually to keep up with your own tax affairs. So I think that's a really, really important point. I know we're flipping between the taxpayer and the tax practitioner, but ensuring that the professional conduct, we do centre on ensuring that we are doing the right thing. I think it's all good businesses. If you're presenting and selling a certain service or selling a certain product, you are in a sense advertising it yourself. So if you're, I don't know, if you fix dents in cars, but you drive around in a car full of dents, is our client's going to be kind of feeling confident to use your service or not? I guess there's a bit of an analogy there.
Do you trust a thin chef or a bald hairdresser? That's one of my things as well. But another thing for us now is that with all the issues with the PwC compromise and things like that, is that we now need to make our declarations on a yearly basis as tax agents. So on a yearly basis, I have to tick a box saying I'm totally compliant with all my tax obligations. Prior to that, it was 3 years. So that's all come through as well. So it's very much front of mind. And we're digressing a little bit, but if the Tax Practitioners Board who registers us has an investigation into us, a lot of times, so the investigation because of poor tax knowledge, if we can put it that way, or the client or us disagree with our tax position, a lot of times we get pinged on not being compliant. And I think it's a really basic thing to do to keep us compliant as well.
Yeah, it's definitely scary, the statistics we see on tax practitioners not doing their own thing, let alone the taxpayers and the tax gap there. But we'll keep going through. Let's return to the income tax return itself. So we have inferred essentially how we can lodge, but can we just kind of take a step back, because some people might not be familiar with the MyTax system itself in lodging. So if we are self-lodging through MyTax, did you want to just explain a little bit about what that is?
Yeah, exactly. So we're allowed to still lodge in paper. We're allowed to let's go back, 2 steps as well, Lizzie. We're allowed to lodge in paper, but why? Right? It's about those things. And also, if you're getting a refund, the ATO, I think the service standard on paper returns is like 60 days or something like
50
that.
50 days, I think.
Yeah, something like that, isn't it? It's something, it's something weird. So you're not going to do that. And, it's a bit like saying, well, cash is still legal tender, but no one uses it much, and the same with the paper. But so we've got this MyTax, MyGov, and you get in through your MyGov account, which is linked to all the different government bodies, and you go in there, and the ATO, the commissioner, has already pre-filled a lot of things, like all your salary and wages. So every time, if you're a salary and wage earner, every time you get paid, it goes through single touch payroll and those sort of things. Everything's there. And you select the different options depending on what sort of income you've received. You can still lodge through MyTax if you're an ABN sole trader as well. You just tick that box and everything opens up. And so all the income is pretty much what we say pre-filled in. And so all you have to do is check it. And then you then claim the deductions that you're allowed. Okay. And you've got to have substantiation for those deductions. But again, what actually gets transmitted to the ATO via MyGov or any software that I use is just the number in the box. There's a label, there's a box, the number in the box. It's up to us to keep, us, the taxpayer, to keep all the substantiation required for those tax returns as well. Okay, so and we may need to justify it if the ATO come knocking and say, can you just justify this? It looks a little bit large. So that's what happens. And it's very straightforward, very similar to what I use. I use separate software, but it's still getting the same result. It's an electronic form that gets submitted to the ATO, and all we do is put in all the numbers.
Yeah. And so, there's obviously that digitalization of services. Essentially, we're seeing the technology embedding coming in to assist more robustly. Do you think at one point we're going to get to the point where we don't need to lodge a tax return? It will be the technology, the data gathering. Do you see that trending for individual tax returns? And perhaps what are the concerns with that?
Yeah, absolutely, Lizzie. The UK have a similar sort of no-touch, as they call it, no-touch tax return for just simple salary and wage earners. And when you hear the government talk about, the politicians in Parliament talk about a standard deduction sort of regime, this talks about a standard deduction and things like that, that's sort of trying to cover everything. So I think as you hear more of that, it'll be, if you're a salary and wage earner, we'll give you a standard deduction of, say, $1,000 or something like that. And you won't need to lodge a tax return, and we'll just true it all up against your interest income and your salary and your maybe your shares and your fully franked dividends and things like that. So I think it's moving that way. There was a lot of talk about, I'd say 10 years ago within the ATO, talking about bringing that in a lot further. But as we know, tax law takes ages. Significant changes to our tax law takes a long time in this country to change. And I think the mentality for the average Australian taxpayer is, I'll get a refund. So they really want to say, what deductions can I claim? I want to have control of my deductions. And when there was talk about a standard deduction, I think the average, if I'm right, from 2024 returns, it was around about $2,300 or something like that, was sort of like the average salary and wage earner standard deduction someone's claiming, right? When they're talking about the standard deduction that's coming in. So I think still there is this aspect that your average Australian taxpayer expects a refund, so they want to claim as many deductions as possible. And again, any changes to our tax law, there's going to be winners and losers, so it's not very popular. So we'll see how it works. But I think we're definitely going to move that way.
Yeah.
And I also, like some clients, I say, oh, you don't want me to do it. Just do your return through MyTax, please. Just put all your deductions, Please, one of my clients who moved from an ABN sole trader and now she's just on salary and wages I said, Sonia, I'll help you with it, but do it yourself, because I don't feel like I can charge you for it, because I'm not adding enough value to help you out. But if I lodge it, I've got risks, so therefore I do have to charge you. So it's a little bit, I'm a bit of a different tax agent that way. I only want to have clients where I really add value, where other tax agents want to just do thousands and thousands of individual returns, and that's how they get the volume through. Again, do you want to eat at an expensive restaurant, or do you want a pizza? It's that sort of thing. It's fast food versus fine dining, but that's how it works.
And obviously the Labor government's has a proposed $1,000 instant asset deduction. At the time of the recording of this, it's not law yet. And I did notice the 2025 tax returns. There is a big warning for taxpayers to be clear that that is actually not applicable for the 2025 year. There's obviously some concern that taxpayers are going to get a bit confused and pop a $1,000 deduction that's unsubstantiated in the 2025 tax return. So
It
it
always
will be
happens with
interesting.
how much
Yeah.
communication's coming out as well, Lizzie. Really, people are going to put things into, an AI search engine or something like that. And it's going to spit it out and not really understand what's going on.
Yeah, and there's been
So
a
it's
lot of
quite
media
interesting they do that.
media
Yeah.
around it, so it's on everyone's mind, but it's certainly something we've got to be mindful of. If there is law changes or reform proposed, we've also got to be mindful of the time it actually takes to be effective and actually law. And that can create some drama and challenges if we know something's proposed, it's meant to be occurring for the particular year and we haven't seen it law yet. It makes it quite difficult, or difficult decisions have to be made on how you actually comply. But certainly the 2025 tax year, there's no instant deduction, but it is something that's on the radar that's moving forward. So it will be interesting to see, the take up of that, assuming it does become law, and then what we see from that, because obviously that will simplify. We've previously had that $300 deduction limit for a lower substantiation requirement, but you still have had to have actually incurred deductible expenses. And so there's a real distinction between what we're talking about here, saying that an instant deduction being permitted, because it's not requiring you to actually prove that you've incurred an expense, or as we understand it coming in. So obviously it's not law yet. We don't know how exactly it's going to be written, but the understanding is that there's not going to be a principle underpinning it that a taxpayer has actually incurred the expenses, and this is just a substantiation issue. An instant deduction being proposed is actually looking at a very different thing from a principled perspective, because we're looking at something that you can just get a $1,000 reduction in taxable income, no questions asked.
Yeah, it's
So
going
I
to depend
think,
on how it gets implemented, because it's still up there in the ether, isn't it? It's been an election promise, and it's legislation by press release, and it's very hard for us to understand that,
that's it.
because, and I think that's where our clients, my clients really, push the envelope with me, and I'm then applying the tax law to them, because it's got to be linked to your assessable income to claim a deduction first. Let's just talk in general terms with an 8-1 general deduction. And then you've got the substantiation exemption saying, do you need a receipt or not? Right? That's really what we're saying if we're looking at very generally. But then we've got the specific deduction. If it comes in as a specific deduction, it's going to be like the COVID testing. So the COVID testing during lockdown and COVID, that was a specific deduction that went through. So you didn't have to be linked to anything. So that's where we've got to really understand, because I have clients, they go, let's just claim $300, just claim as much as you can. Okay, but it's still got to be that. It's still, you've got to be, is there a reason? There's a de minimis on mobile phone usage, for example, which is $50. The ATO said just a general incidental phone usage, but you've still got to have used your phone to generate your assessable income. So again, it's always that connection first. And that's why, 8-1 is the most beautiful bit of legislation. It's my favourite. Assessment it many times. I just think it's beautifully written, because it's really, Section 51, in the old days, in the old Assessment Act, it's just beautifully written.
Yeah. So moving on to our kind of last topic of conversation, and that's about, well, what happens if you have lodged a tax return and then you realize that there's an error? What do you do there? Are you best to fix it or wait to see if the commissioner picks it up? What do you do there?
Do you want the right answer?
We want the right answer.
Do you want the right answer? No,
nice,
I'm just joking.
Answer.
I'm just having a joke. Okay. All right. So amendment periods. Okay, amendment periods are either 2 years or 4 years at the moment. Okay, so 2 years is for the smaller, simple sort of taxpayers, 4 years otherwise. Amendments are on either side as well. It's the taxpayer/tax agent that's doing it for you, or the ATO. Unless, of course, what do we say? Unless it's for fraud and evasion, it's open-ended completely. Okay, so if you haven't put your cashies in, let me put it that way, or if you receive cash, that's evasion. It's open-ended. But normally we've got a amendment period of 2 or 4 years that you do. Now, if you do find an error, you change it yourself. Otherwise, there is a risk that if the ATO find it, you're going to not only be hit for any sort of tax shortfall, if it is in the ATO's favour, but you could also be hit with penalties. And the penalty percentage depends on how risque you have been, okay? And also your compliance history. Have you been reckless? Has it been an intentional disregard for the tax law? All those sort of things is what we talk about. So it's always much better to fix it up when you work it out. And even I even amend. I had a client that came through and I thought they had private health insurance because it looked right, but all they had was extras. Okay. Now, it did not impact their tax calculation at all in the year. So they, in terms of were they liable for the Medicare levy surcharge or not? But I still amended it because the other thing to be aware of that I just thought about then, Lizzie, as well, is when you lodge a tax return, you're making not just amount, quantum number declarations, you're making a lot of other declarations as well. And all of those have to be true and correct. Spouse, do you have private health insurance? Have you got overseas money more than $50,000? Those sort of things are the declarations that I'm just, doing off the top of my head. So it's all those things. So it's important that as soon as you identify an error that you amend, okay, if it's capable, and you're allowed to, okay, and you should do that. The other thing, if the ATO, not only could they do penalties, but there's also general interest charge on top of it as well. And it's important to mention general interest charge in this conversation because everyone needs to be now aware that it's non-deductible anymore as well. The laws have just changed, saying as of the year that we're in, that interest, if the ATO charge you interest, it's now no longer deductible as well. And at the time of recording this, the general interest charge is around about 11%. It's pretty large, right? There's a penalty. I always say there's a bit of a penalty component in that interest rate as well. And so it's really important to understand that you amend to stop the clock, really, the way that I say it. You amend to fix it up and stop any interest accruing and stop the potential, up to 100% penalty on it. 25, 50, 75% of the shortfall interest that needs to be corrected.
And ultimately, even if the commissioner amends it themselves and sends you an amended notice, if you disagree with it, the onus is still on you to prove the ATO that was wrong. And similarly, if the ATO determined that you were reckless or it was intentional disregard, the onus is on you to prove that is not a correct interpretation. And we've seen through the tribunal and such where the taxpayers argued those kind of things, but with if they don't have evidence to justify that, the recklessness outcomes stand. The commissioner has the power and it's within their rights to interpret your errors that remain unfixed as they see fit and how they interpret the evidence that they have. So it is critically important.
Absolutely. And that leads beautifully into, we talked about amended assessments, but default assessments are really what you're coming down to. So if someone hasn't lodged for quite a few years, the ATO have every right to issue, Commission has every right to issue default assessments. And the default assessments can be pretty ugly because as you alluded to, Lizzie, they're going to then say, well, they could use like an asset betterment test, which happens and says, looks at everything that you bought and said, well, to buy the house, the car, the yacht, the jet ski, you must be earning this much money. That's how much money we think you've earned, which you're going to pay tax on. And the default assessment says, yep, that's what it is. You have to prove not that it's wrong, not only that it's wrong. What do you have to prove, Lizzie? You also have to prove what the right amount is.
Yeah, you've got to prove what your
onus of proof is on you. So default assessments And that's what can happen, coming back to one of our original discussions, if you're non-compliant. The ATO can go, well, we're just going to issue a default assessment. So they're going to look at, you know, all your social media and go, that holiday must have cost you a fair bit.
Yeah.
We are going to pin you on that. And that's what the issue is. So default assessments, you never want a default assessment, never, because they just make up a number and you've got to prove the number's wrong and what it is.
Yeah, exactly. And so ultimately, you know, don't just, again, going back to our earlier comment, don't just kick it down the line, because ultimately it could end up being a worse outcome for you overall. So you should be doing the right thing. You should be contemplating what you're putting in there. We may not like the administrative burden of having to compile this information. But as I said, the technology is improving. There's a lot more data capturing, which, you know, some people disagree with. Some people think it's a good thing. Ultimately, we're getting to a point where there's a lot of information compiled for us, and we've got to be mindful of understanding what we're getting involved in year to year. Understand, you know, if we're playing around in the crypto economy, we need to gather information and understand and document so that we can, you know, incorporate that in our tax accordingly. There's a lot of taxpayers out there that don't understand that even though it's not Australian dollars or dollars that we're playing around with, we're dealing with crypto assets, still going to be taxable. Just because they're not dollars doesn't mean they're not captured within the tax system. So there's lots of ways you can fall short. So rather than kicking it down the line, if you're uncertain, if it's too complex, too hard, it's a good idea to seek the assistance from a registered tax practitioner. So based on that, did you have any final comments that you might like to make as we wrap up today's episode?
I think the biggest thing, I think, for the listeners to really understand is just lodge. You know, we don't like doing our paperwork, just lodge. You know, if you just can't leave it. Put a date in your calendar and say, okay, let's do it. Right. And I think that's what's really important. And understand what's happening when we do lodge that. I think that's just the most important thing, because when you have issues with the ATO, you want to be as compliant as possible, okay? And you don't want to get on their bad side, okay? Because the important thing to realise, and I sort of said bad side, there's our Administration Act, which the ATO is adopting and the Commissioner adopts, but there's also discretion within that. And you want to fall on the side of discretion if they can allow it, not on the wrong side. And that's all to do with good compliance hygiene.
Yeah, so good compliance hygiene is something to really kind of wrap up today's session on. And just to reiterate that the Commissioner has lots of powers, and they are going to the default assessment point here. They only need to have reasonable grounds to determine what your taxable income is. And they've got lots of access to data and information through their data matching program. So that information can be compiled to get a grasp of what's going on. And the onus is ultimately on you to show what your taxable income actually is if you disagree with their assessment. So with that, we might wrap up today's episode. So that's it for this episode of Taxed and Confused, where the rules are rigid, the paperwork is endless, and the burden of proof is all yours. If you enjoyed today's deep dive into tax admin, don't forget to subscribe, leave a review, and share it with someone who's just as confused as we are. And remember, this podcast is for education and entertainment purposes only. It's not tax advice, and we're not your tax agents. So thank you for listening, and until next time, stay curious, stay compliant, and stay just a little bit taxed and confused.